Welcome to Discovery Depot YT, your go-to source for exploring the latest trends in technology and finance. In today's video, we're tackling a critical question that's on the minds of economists and investors alike. Could digital currencies trigger a new financial crisis? With the rapid rise of cryptocurrencies and central banks exploring digital currencies, the financial landscape is changing faster than ever. Stick around as we delve into the potential risks and implications of this digital financial revolution. Don't forget to subscribe and hit the bell icon to stay informed on the future of finance and technology. Money, as we know it, is changing. Remember when we used to trade cows and chickens? Okay, maybe not that far back. But from bartering to coins to paper money, we've seen it all. Now, we're in the digital age, and that means digital money. Cryptocurrencies, digital tokens, central bank digital currencies, it's a whole new world. Some people say it's the future of finance. Others are a little more skeptical. Could this new technology lead to a financial crisis? Let's dive in. First up, let's talk about Bitcoin. You've probably heard of it. It's the cryptocurrency that everyone's talking about. Created in 2009, Bitcoin promised a decentralized, secure way to transact without banks. It was like the Wild West of finance, exciting, risky, and full of potential. Soon, other cryptocurrencies popped up, each with its own quirks and promises. Ethereum, Dogecoin, Shiba Inu, the list goes on. Suddenly, everyone and their grandma wanted a piece of the crypto pie. But it's not just tech-savvy millennials and billionaires investing in digital currencies. Governments are getting in on the action too. Enter central bank digital currencies, or CBDCs. These are digital versions of a country's official currency, issued and backed by the government. Think of it like a digital dollar or a digital euro. Countries like China are already testing their own CBDCs. Why? Well, they offer faster transactions, lower costs, and increased financial inclusion. Plus, governments like to be in control, and CBDCs give them more oversight over their financial systems. But hold on a minute. Before diving headfirst into the world of digital currencies, it's crucial to understand the potential pitfalls that come with it. Before we all jump on the digital currency bandwagon, let's talk about the risks. First up, volatility. Cryptocurrencies in particular are notoriously unstable. Their value can swing wildly in a matter of hours, sometimes even minutes. One moment you might see your investment skyrocket, and the next, it could plummet without warning. This kind of unpredictability can be nerve-wracking, especially for those who are new to the market. Their value can swing wildly in a matter of hours. Imagine investing your life savings one day, only to lose half of it the next. The emotional and financial toll can be devastating. That's the reality for some crypto investors. The dream of quick riches can quickly turn into a nightmare. And then there are the scams. The digital world is rife with opportunities for fraudsters to take advantage of unsuspecting investors. Remember those emails from Nigerian princes promising you millions? Well, the crypto world has its own versions of these scams. The crypto world has its own versions: Ponzi schemes, fake coins, and phishing attacks. These scams can be incredibly sophisticated, making it hard to distinguish between legitimate opportunities and fraudulent ones. It's enough to make your head spin. So, while the potential for high returns is there, it's essential to proceed with caution and do thorough research before making any investments. Section 5, Rules for the Digital Age, the Struggle for Regulation. So how do we navigate this wild west of finance? Well, that's where regulation comes in. Governments around the world are scrambling to create rules for this new digital landscape, but it's like trying to catch smoke. Cryptocurrencies are designed to be decentralized and borderless, which makes them difficult to regulate. And then there's the question of how to balance innovation with consumer protection. Too much regulation and you stifle innovation, too little and you risk another financial crisis. It's a delicate balancing act. Echoes of financial crises past. Throughout history, financial crises have left indelible marks on economies and societies. From the Great Depression of the 1930s to the dot-com bubble burst in the early 2000s, each crisis has had its unique triggers and consequences. Speaking of financial crises, could digital currencies be the catalyst for the next one? As we move further into the digital age, cryptocurrencies like Bitcoin and Ethereum have gained immense popularity. But with great power comes great responsibility and the potential for significant risk. To answer that, let's take a trip down memory lane. By examining past financial crises, we can better understand the potential pitfalls and dangers that lie ahead with digital currencies. Remember the 2008 financial crisis? It was a time of unprecedented economic turmoil, with banks collapsing and millions losing their homes and jobs. It was triggered by subprime mortgages and a lack of regulation in the housing market. Sound familiar? The lack of oversight and the greed of financial institutions led to a catastrophic collapse that took years to recover from. Now imagine that on a global scale, but with digital currencies. The decentralized nature of cryptocurrencies means that they operate outside traditional financial systems, which can be both a strength and a vulnerability. The potential for a crisis is definitely there. With the rapid rise and fall of cryptocurrency values, investors can experience significant gains or devastating losses in a matter of hours. If the value of cryptocurrencies were to plummet, it could have a ripple effect throughout the global economy. Traditional financial markets are increasingly intertwined with digital currencies, making them susceptible to the same volatility. And let's not forget about the risks of cyber attacks, which could cripple entire financial systems. As digital currencies rely on complex technology, they are vulnerable to hacking and other cyber threats, potentially leading to widespread financial chaos. Section 7. Can central banks save the day? So, who's going to save us from another financial meltdown? The question looms large as economies around the world face unprecedented challenges. Well, central banks are certainly trying to get ahead of the game. They are not just sitting idly by, waiting for the next crisis to hit. Instead, they are actively engaging in various strategies to stabilize the financial system. They're closely monitoring the development of digital currencies and exploring the potential risks and benefits. This involves a deep dive into the technology behind these currencies, understanding how they can be integrated into the existing financial system, and assessing their impact on monetary policy. Some central banks, like the Federal Reserve in the United States, are even considering launching their own digital currencies. This is a significant move that could reshape the financial landscape. The idea is that central bank digital currencies could offer a more stable and secure alternative to cryptocurrencies, which are often seen as volatile and risky. By providing a government-backed digital currency, central banks aim to offer the security of traditional money with the convenience of digital transactions, while still providing the benefits of digital transactions. This includes faster payments, lower transaction costs, and greater financial inclusion, especially for those who are unbanked or underbanked. But whether they can prevent another crisis remains to be seen. The effectiveness of these measures will depend on a variety of factors, including how well they are implemented and how the global economy evolves. Central banks are playing a crucial role, but the future is uncertain, and only time will tell if their efforts will be enough to save the day. Section 8. Preventing the next crash. Measures for a stable system. But it's not just up to central banks. Governments, regulators, and financial institutions all have a role to play in creating a more stable and resilient financial system. We need clear and consistent regulations for digital currencies, both domestically and internationally. We need to educate the public about the risks and rewards of investing in digital assets. And we need to invest in cybersecurity to protect our financial systems from attacks. Section 9. Crisis or correction. Predicting the future of finance. So, will digital currencies trigger the next financial crisis? The honest answer is, nobody knows for sure. The future of finance is uncertain, and there are many factors that could contribute to a crisis. But one thing's for sure, digital currencies are here to stay. And as with any new technology, there will be growing pains. The key is to learn from past mistakes, adapt to the changing landscape, and work together to create a more stable and inclusive financial system for everyone. Section 10. Buckle up, navigating the digital finance roller coaster. The world of digital currencies is a wild ride. It's full of innovation, opportunity, and yes, risk. But just like a roller coaster, it can be exhilarating and terrifying at the same time. The key is to buckle up, hold on tight, and enjoy the ride. And who knows, maybe, just maybe, we'll come out the other side with a more efficient, accessible, and secure financial system for all.